Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Kauli. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Kauli, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Kauli.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of welcoming Vinney Chopra. So thank you for joining, Vinney. I appreciate it.
Thank you, Sakar. It's such a pleasure to be with you. And I know we've been chatting and really getting to know each other. And it's been wonderful.
Awesome. So thank you for joining. For viewers and listeners, for you, the background with Vinney is Vinney came with just $7 in his pocket. And after many years now, he is an unbelievable big star in multifamily. To put it in context, his group owns 4,200 doors, well over $350 million assets, and he has done 29 successful syndications. He is a coach, a speaker at many conferences, and also a great, marketing, sales, motivational speaker and a guru as well. So thank you for taking time, Vinney. I'm looking forward to an engaging conversation and delve into the details of your business and all the different business ideas that you have today.
Totally, Sarkar. I'm very pleased to be here, and I hope I can bring excellent value to your audience.
You always do.
Privileged to be here. Yeah.
Awesome. Vinney, so quickly give us a brief background, and we'll kind of get into the details of several things that you have ongoing right now.
Totally. I came from very humble beginning. I grew up in one-bedroom apartment with 6 siblings, one living room, hallway, and a bedroom. And I really wanted to become an engineer. In India, you become an engineer or a doctor.
Sure.
That's why we have so many doctors in USA coming from India, came from India. And that's what I did. I did mechanical engineering. I always had a passion to become manager somehow. I don't know why, leader. And I wanted to do MBA. And in marketing and sales, it sounded so good. So I started applying. I was denied visa many years, but then I kept on trying. I was working for Larsen & Toubro in Bombay with Reliance Group now, which is one of the finest groups of India, and came to George Washington University many moons ago, 44 years back actually, with $7. And I remember kind of flying over the Hudson River in a helicopter, because one of the plane that brought me from India was there, LaGuardia Airport, but the other airline that was going to take me to Washington DC was on strike. I didn't know that. And I kept on pressing and saying, I got to go there. My uncle is waiting and this and that. They heard me from my thick accent. They flew me in a helicopter. Oh my gosh, to New York, New Jersey. And here this little kid, 22 years of age, trying to look at all these dazzling lights. I still have that vivid imagination. But rest is history. I sold Bible books and encyclopedias door to door, got knocked down, learned a lot of tricks of the trade of sales. An engineer turned into a salesperson. That's what happened.
Awesome. Now I know absolutely, Vinney, with your company and your group, now you are a big star. You have a lot of assets under management and things like that. Help us understand, Vinney, that why multifamily? I know you have had a prior small real estate career as well, but then you came in such a big way into multifamily. Give us some sort of benefits or perhaps why you like multifamily so much.
Totally. I would love to. Sarkar, the biggest thing is the economies of scale. We were owning a lot of single family homes. I know you own a lot of them, like we discussed. And what we found was they were being managed not by us, because they were in different states, different cities. So we were hiring property management companies, and they would kind of bill me quite a bit,
Sure.
for the repairs and this and that. And if somebody left, then you have to paint the house again.
Sure.
And then they will charge me half a month of leasing commission, I think, all
Sure.
that. And if something went away, like the stove or this or that, so the cash flow was not where it should have been.
Sure.
At the end of the day, when I saw it, my wife and I sat down. We said, my gosh, we're not going to be able to really have a lot of passive income when we retire. This is, I'm talking about, we started investing 35 years back in single family homes. But then I became a broker in 2005, 15 years back alone,
Sure.
and we said, okay, I got to dig into more into commercial side.
I
So
see.
that's what I did. I started looking at office space. I looked at, shopping centers. I looked at hospitality, a lot of other places, industrial, and multifamily totally blew me away. Totally blew me away.
I see.
I bought the book from Amazon. I remember I even bought a course from eBay for $400 for my mentor, who I paid $30,000, by the way,
Wow.
when I got to know him more later on in my life. And I have, just discovered that multifamily is the best way people need roof over their head.
Sure.
It's there to collect rents from 100 people at, given time. We can repair their, apartment needs and all that with
Sure.
a person, tech person and so on. So that's what did. And then also the syndication model, that's pooling of the money together of the like-minded people.
Sure.
That's what really has been my sure success. It's not just multifamily, it's the syndication part. So that's where we started with one investor. Now we have 226 investors with the grace of God, and they have been investing millions of dollars with us. We have doubled, tripled their money, and they love us and so forth.
Awesome. Thank you for that detail, Vinney. Now, Vinney, speaking of, let's say, purchasing the multifamily assets and different markets that you target, what is your thesis? Like, how do you kind of go about which submarkets to go, or perhaps even at a much bigger scale, like which states you go in, and then how do you kind of go into individual submarkets within that?
Totally. The biggest thing is for any syndicator or any group who's going to look for an upside in the pricing and in the, the affordability and increasing of the rents, which really gets along with RUB systems and other things that we do, dog parks, this smart homes, all the features. It's the jobs. So that's what I was taught 15 years back. And I've stayed true to that, compass, I say, true north, right?
Sure.
And the biggest thing is the jobs. So I do a lot of studies wherever I go to see how and when the jobs are coming, who are the major. Never buy into one single employer, never, even two. I don't like it. I like 3, 4, 5 employers, because that way you are not really, hitting with the bust or other stuff. The big part is I've been in Texas quite a lot. I think I've lost opportunities not going out of there, but a lot of my off-market deals were coming like crazy. And so that's what I stayed. 24 syndications I did in Texas.
Wow.
I did 2 there in Georgia. Atlanta, Georgia is amazing. I'm very bullish on it still. And I bought this property. I just shared with you for 12 million something, and its offer is 19 million in just 3 years. And I've not done a darn thing. So it's the jobs, which is really, I bought this property where it was going to grow like crazy. People said, Vinney, don't buy that part of the town, of the Atlanta. But I said, no, I know metro studios are coming. The warehouses are coming. The shopping mall is coming. So by doing the research in the future, what the 5 to 10 years will be, same thing is true in Florida now, where we bought the products and we are during COVID collecting 96 to 98% of the rents.
Awesome.
That really helps,
So, right. So thank you. And so, Vinny, you're basically saying emphasis on strong job growth along with looking at some sub-market development as to, whether
Yes.
there are new companies moving in or like sort of the cities investing, sort of into new infrastructure and things like that. So all of this research, is it mostly sort of online, or is this more like...
All online. And
Mhm,
the good part is, Sarkar, what my recipe, which I teach in my academy also, is to get the best of the best OMs from
mhm,
the brokers
mhm,
of that particular city. If you want to research,
mhm.
yes, who wants to put that city on the map around the world?
Sure.
The brokers. And
Absolutely.
they are going to put in the operating memorandum the best sources for you to get graphs and information,
Mhm,
and
mhm.
find the current one, because that's going to tell you a lot. And
Sure.
then dig deeper into those resources to really make your decisions.
Sure, sure. Thank you. So now, speaking of broker relations, Vinny, obviously brokers control probably a majority share of almost all the
Yes,
commercial real estate deals, right?
yes.
What are some of your your experiences, like how you have improved relations perhaps, or how do you kind of connect with different brokers from all these different markets you have your assets in?
Thank you so much for asking that. No, I really believe that, our team, we need to be really looking at always win-win-win-win situations
Sure.
with everybody: attorneys, lawyers, syndication attorneys, brokers, commercial brokers, loan brokers, everybody. You want to
Mhm,
build that relationship, that bond,
mhm.
that you rise up in their eyes. How
Sure.
can you do that? Is by constant communication
Mhm,
through texting, through phone call, through email, sending some gifts. I teach that all the time. I don't mind spending $100, $200 to send them something really good that
Sure.
they can really, value your friendship. Not really just that you're buying the business, but you are keeping them abreast of. And if some great articles come, if you find that they have closed on a deal, finding their kid's name, their wife, where they go on vacations, same things. Everybody knows about them. But the key thing is to keep them in your CRM. My
Mhm.
best CRM is my iPhone. I have the highest and the biggest, and I write notes like crazy.
Mhm.
I put every information. I go to the field section and I put, of course, job, I think title, company name, then there is another field there right on the top. I
Sure.
keep on adding stuff over there. In the notes, I keep on putting some of their copies of their emails and all that, so that I know when they talk, and I keep in touch with them very, very often, three
Mhm.
times a month, many times, even
Wow.
sometimes
Mhm.
two times a month. And the best thing is that the more interaction do through texting, they respond better.
I see.
And
Mhm.
I just went to Austin, just to let you know, and
Mhm.
we got the deal signed up on Monday, because my friend broker who was bringing the deal, he said, Vinny, you are so easy to work with. 9 years back, hold on, 9 years back.
Wow.
So
Mhm.
he was able to guide us, with this whole beautiful $35 million deal, with
Mhm.
6 parties in the making to buy it. We were in the best and final, then the final, then we got the deal. The reason I'm saying that is, it's again the passion
Mhm.
to really make them believe. I mean, the thing is, you got to really learn the lingo also,
Sure. Mhm.
definitely,
Mhm.
and know what you're talking about, because
Mhm.
they smoke you out and throw you by the wayside, because you are starting at the sixth level. I always say,
Sure.
fifth or sixth level, you got to move up to the first level. And the
Sure.
first level are the people who are performers,
Sure. Sure. Mhm.
because broker's job is to sell, make commissions, and it's good for the seller, for the brokers and all. I never have had any buyer broker ever. I always deal with the listing broker. I
Sure.
made up that mind 14 years back. I don't want a vacuum. So I want the same seller over here. The broker is here. He's going to represent me also. So there is no vacuum. And the listing broker, knows the lowest price and the motivations of the seller.
Sure. Sure. Sure.
It has helped me quite a bit. Yeah.
Awesome, awesome. Now, speaking of, you are buying. By the way, share with our listeners, Vinny, like which are some of the states you are buying right
Oh,
now?
sure, sure. I'm very, very bullish. My students are also buying, in Tennessee, in, of course, Georgia, Atlanta, Georgia, Chattanooga, North Carolina, South Carolina. I'm very bullish. Virginia, I'm very bullish with my senior living and other things.
Hmm.
Florida, huge. As the demographical shift is happening,
Hmm.
the big shift ahead, the book came,
Sure,
a couple of years back. It's happening right now. 10,000 baby boomers are retiring, as turning 65.
sure.
Maybe they're retiring or not, but there is a big influx of seniors, which will be getting bigger and bigger as next 40 years.
Hmm.
Then Texas is going to be strong always, always. Nothing to really worry about Texas.
Hmm.
And then, of course, I like the Oklahoma and all the, Huntsville, Alabama's. I've not bought there, but I
Sure,
like that market. I live in California. I should give really good credence to. I know Denver has kind of gone up,
sure.
but then Utah, I like Utah also.
Awesome, awesome. Thank you. So now, speaking of all these, growing markets here, Vinny, obviously we know that the prices of assets are, going up and up. Some of them are like very low cap environment, especially when we speak of, let's say, the Austin, the Dallas, or the Tampa, or Miami, and things like that, right? How do you kind of protect yourself in terms of, like, are you paying too much? Perhaps, or are you focusing on like a tangible value add? Because sometimes the deals can be so pricey that you can almost say that you are banking more on appreciation and things like that, and it starts to become more like a yield play and things like that. Could you maybe share that, how you sort of see value in these high price deals as well?
I would love to, sir. Again, I couldn't buy anything in 2018. I
Hmm.
bought two in 17, then I bought two in 2019, and haven't bought anything with COVID happening right now.
Sure.
And now we just locked in our first deal of the year this
Hmm.
Monday. We are in July. But you're right, we are very conservative in our underwriting,
Hmm.
definitely.
Hmm.
We are going lower LTV right now
Hmm.
because we don't want too big a mortgage. If the some changes happen,
Hmm.
money is very, very cheap, as you all know.
Sure.
2.9%, 2.83%. 5-year IO is very common at the high level when
Hmm.
you are purchasing about 30-40 million dollar loan.
Hmm.
But the biggest thing is being conservative. I know last year, I think we did not go in a like a best and final and everything. We backed out on 3 deals because they were just going outrageously. Some people wanted to get in there, and I think they paid 1.5 million more than what we wanted to pay.
Sure.
That's a
Hmm.
lot of money.
Hmm.
That's like
Sure.
5,000 per unit more.
Hmm.
So we are a very conservative team of people, myself, my company, and my other partners who are
Hmm.
kind of working with me. The key thing is you got to stay put. You don't want to get into a deal where you don't feel comfortable.
Sure.
You know,
Sure. Sure.
that is not the way to do it. And sometimes you're right. I mean, we got this deal because we know the deal. We had the underwriters write it. The Northmark actually already gave us the blessing, and
Hmm.
their underwriting was even better than ours. Ours was more conservative.
Sure.
So we
Hmm.
liked that. And they blessed the loan and everything. So we wired 500,000 day one yesterday, to lock the deal, right?
I see. Mhm.
500,000 more will go to the seller at the 30th day after due diligence.
I see. So thank you for that detail. Now, Vinny, speaking of underwriting, right? What are some of the high level main things you do to, you said you are definitely doing conservative, sort of underwriting. What are some things that you definitely do on lots of these deals? Like, what are some of the parameters that you look for?
Totally. We always like to see the mission driven, units. What that means is that how can we bump up the rents
Hmm.
as we take over, because we are vertically integrated. We
Hmm.
manage all our deals. So we look at, okay, what's the market rent going out there, and
Hmm.
how much can we go with renovation, without renovation, small renovation, big renovation, things
Sure.
like that. So it
Hmm.
should be mission driven. The
Sure.
other part is like the deals we are buying stable occupancy. That
Sure.
is a huge part. We don't want to really get into this with the COVID happening right now.
Sure.
We don't want to get stuck with a deal where it might be adverse effect, right?
Sure.
We are going low LTV in our underwriting. And then we are also not taking too much appreciation of the rents, because unless it calls for, it only can call if the market is there. We are not even taking that it will reach market. We are discounting that. If the numbers make sense, then it should be, good to get into it. I know with the COVID happening, there is a lot of toxic, I call it, on the rent rolls right now, delinquencies, concessions, and a lot of residents who have not paid. So
Sure.
there will be some deals coming in the market. It's good to have money ready. I call it with the investors, let them just have the money ready to jump into the deal, but
Awesome.
also walk away. I mean, the best thing is, what do I look into underwriting? Also taxes. Please make sure that you look at the assessor's office and even do the projections, because some of these taxes are not just increasing by 3% every year. They're going up by 7 and 10 and 20, like
Sure.
Insurance is another thing which we definitely, and then the payroll. So those three things are very, very important to us. Of course, the CapEx budget, we are raising 1.7 million, I think, in this deal from investors. We don't want to do bridge loans. Nobody's giving bridge loans anyway right now, So we like to be as tight as we can before we really get our PPM ready and all.
Sure. So speaking of payroll, Vinney, how are you kind of synthesizing the payroll numbers? Is there a correlation between how many units and what type of staff and how you pay and things like that?
Totally. We are, internally driven, like you said. So you're right. We look at what their payroll has been and then kind of watch it if we have the same personnel, or do they have one or half extra in there, and what other charges have they been charging? And then look at their bonus schedules and all their FICA and all insurance, all that stuff.
Sure.
So we have been kind of looking at and then taking it as a ratio of the units, of course. So 1,200 is a pretty good number. 1,200. It depends also on the area too, by the way.
Sure.
More remote area, it might be 1,100 per unit, even 1,000 per unit, But usually we take a very conservatively at 1,200. Yeah.
Sure. Now, you stated, Vinney, that your company is vertically integrated. You are doing obviously property management, asset management, and everything, right? So, why? I guess I want to know perhaps that why you are such a big proponent of having the property management in-house. When I talking to a lot more experts, they'll say that, okay, we want to do the asset management, which sort of oversees the property management, but sometimes they are saying that we don't want to deal with property management and all the day-to-day details that come with it, right? So can you maybe share what some of the benefits, or perhaps why you want to deal with property management aspect as well?
I would love to. And there are great property management companies and asset managers and all. At the same token, I think we are paying higher price for it. It looks like they're only making 3%, or 3.5%, like the management fee. But the other price, cost involved is on the other construction side, and then their profitability and maybe the products and things like that. I'm not saying blanket wise, but I had very bad experiences, and some people might be able to relate to that.
Sure.
I've been able to save millions of dollars, literally millions of dollars. For example, I got my pavement done for 192 units Albion apartment that I'm selling for $123,000
Wow.
for 192 units. The big bid was 470,000. Listen to this one. Came down to another bid at 325 6-7 months back, and then even more than that. Then it came down to 250, then to 150. Can you believe it?
Wow.
2 big asphalt and striping and everything. And my regional manager in Texas said, Mr. Vinney, you're not going to believe it. Oh my gosh, we got our interior, renovators, a very nice company. We have preferred vendors, by the way, where we buy 4, 5, 6, 8, 10 units. We get preferred vendor list. We get better pricing on the HDA supplies, maintenance supplies, everything. And we buy a lot of stuff from Amazon also. But the thing is, these property management companies will never do that.
Sure.
They
No,
will
I
never
agree. Totally agree.
so I get involved, my daughter gets involved, we negotiate, we get 3 bids come in always, and then we even bring them down. So I've saved millions of dollars.
Sure.
in the last 12
Now,
years.
Vinny, I guess I understand the, sort of the renovation, the CapEx side of the house, but how do you manage sort of the day-to-day tenant relations, repairs, notice to vacates, whether the repairs are done correctly, which kind of transforms into reputation management and things like that. How do you sort of control, or how's that day-to-day handled? I'd love to kind of hear your thoughts on that.
Very easy, very easy. At the peak, we had 134 full-time team members, of course, 4 at every asset. Our community manager or property manager, assistant community manager, or leasing agent,
Sure.
and then tech, HVAC certified, 4th, and then the 5th one will be porter, helping the HVAC. So our leader is the community manager, well established, who's 25 years of experience, 20 to 25. I never hire less than that. The other good part is let them then take ownership of the millions of dollars of assets. We meet with them on Zoom meetings.
Sure.
My daughter is in San Francisco. I'm here in Danville. My wife is here, and our accounting department is local. So all 7 of us, our webcams are on, and we meet Tuesdays and Thursdays. And we have software which is totally taking care of everything. Nobody has to go to the bank. We scan nobody brings money, cash at all. Every dime is taken care of through the scanners, check scanners.
Sure.
And then our accounting department, at the peak, we had 5 full-time employees, 5 full-time team members. They were reconciling daily. All these monies coming in, payroll going out, and then of course the bills getting paid. So the systems I've developed, it just gives me a lot of sleeping good at night time, and I can play and bridge online. I play bridge 1.5 hours. I go swimming at 4:30 and all, and I do yoga 2 hours in the morning, my miracle morning. So that way it's good to have systems set up. I'm a systems guy.
Sure.
I really hold them accountable, all the vice presidents of all my companies, so that they are able to perform. And then we keep track, so my daughter is fully operations side. She's, fully aware of, and we have to-do lists. We have all the renovation schedules. We have everything. And then we have the software. We look at delinquencies. So our managers prepare all these reports, and then we go over them with them.
Awesome. Thank you for the detail. Now, speaking of the sort of the renovations, the capital improvements that we do on these properties, right? So is that being also done by your sort
community manager?
Community managers is overseeing some of the subcontractors and things like that?
Yes, everybody. We like to really document a lot of things. So once even a product is done or repair is done, we need a picture sent to us, and we store it also in the drop boxes and all. I am a big proponent of Dropbox. And then also when the job is done, we store pictures also, so that we can make sure jobs are done correctly. And then I share that with my investors. Every quarter on the quarter, I do my meetings live on Zoom and open answering questions. And I bring the property to my investors. They love me for that, because whenever I travel, or they can send pictures anytime. So I show them these pictures. I think in my 12 years, only 7 investors out of 200 plus 200 have ever visited the properties. I bring it to them every quarter.
Awesome. Thank you for the detail. Now, on the asset management side, Vinney, how is that done? Like, meaning in terms of what sort of calls and KPIs you're targeting working with your community managers?
Oh, two. Very good point. Again, we do our performa, right, for
Mm-hmm.
our 5-year projections. So we upload our budgets into
Mm-hmm.
the software, and then we are looking at what occupancy level. And our
Mm-hmm.
main thresholds are occupancy, delinquency, concessions, and retention, right?
Sure. Mm-hmm.
90-day retention, how many notice to vacate are coming in, how many of them have been there longer, how many of them we have gotten. So we have specific data points that we go over every week, every
I
week.
see. I
And the
see.
marketing end is the big one over there, where we are getting the traffic from the Facebook, the Instagram, the Craigslist, or apartments.com. I'm very big on apartments.com
Mm-hmm.
software because that's where they record every call also for you. So
Mm-hmm.
my team can go and listen to any of the record, how the leasing agent is talking to the prospects, how many calls have been dropped,
Mm-hmm.
how many of them sent out digital brochures from their website,
Mm-hmm.
right
Mm-hmm.
from apartments.com.
Sure.
It's amazing. Virtual tours can be given, a lot of great stuff. So we really keep 2-3 things going every week at the threshold. Of course, accounts payable manager joins, my VP of finance joins, and everybody. So we are all like in a boardroom, let's just say
Sure.
that,
Sure. Sure. Sure.
half
Sure.
an hour, 45 minutes for every asset. During COVID, we've been doing it for twice a week,
Wow.
so
Mm-hmm.
8 times we are doing it. And then they could reach us anytime, community managers, and all the proposals they send through email to all the people, and then we make decisions, we approve. Yeah.
Awesome, awesome. Thank you. Now, Vinny, you are also a big into assisted living,
Yeah.
sort of on the commercial side. Could you maybe give us some synthesis about, here you are doing, multifamily deals, and you have now branched out into senior assisted living. Could you maybe help us understand, why that space? What are some of the sort of the profitability metrics in that as well?
Totally, Sarkar. The key thing I find is I'm a senior now, too. I'm 67. I'll be next month 68, and God bless. And, and the key thing I'm finding is 10,000 baby boomers are turning 65 every midnight in USA.
Mm-hmm.
And in the next 30, 40 years, 10 billion population of the world, 2 billion with a B is
Mm-hmm.
going to be seniors. And in
Sure.
USA, 100 million, hold on, 100 million, we are 340 million total population. Maybe we'll be staying about the same number, maybe, we don't know,
Mm-hmm. Mm-hmm.
with attrition and births and all. But 100 million in next 30 years, 40 years is going to be 65 plus.
Wow.
And another, maybe I think out of 100 million, maybe 10 or 20 million will be 85 plus. So I've been dreaming about really starting something very special in senior living,
Mm-hmm.
investing or build and things like that. I believe in law of attraction quite a bit, sending the signals out. And I've been dreaming about it, researching, and how can I get into it, God? And he brought me, together with a great partner who has built these senior assisted livings, not nursing homes, not rehab centers, not independent living,
Mm-hmm.
but only the assisted living space where
Mm-hmm.
there is no COVID effect, there is zero deaths, and all that structure, right? So
Mm-hmm.
essentially, that's where we are building, but we are not doing residential assisted living.
Mm-hmm.
That I left many years back,
Sure,
right?
sure, sure,
I looked at for multifamily assisted living.
sure.
So we are building 66 units, 88 units, 100 units, brand new,
Mm-hmm.
A plus plus actually, with the movie theater, spas, and dining halls, beautiful restaurant style dining. And
Sure.
then we have courtyards and waterfalls and putting greens. And I'm just thinking about some other things I missed. Oh, library and sunrooms and beautiful
Sure, sure.
community.
So it's basically a class A full service assisted living for seniors, right? So
Yes.
now, what are some of the profitability metrics into it, Vinny? Like what it makes sense to go this route?
Very good point. The big thing is there is huge demand, right, Sarkar? So that's one thing I'm liking, that we can build this. It takes us about 6 to 7, 8, 9 months to get all these ordinances passed and buy the right land and do the studies and
Sure.
feasibility studies and all. But then we raise the money quickly, then we build it in 12 to 14 months. Done,
Okay.
ready to occupy. We start marketing way before, and then we are able to operate for 3 years or so. Then we sell it, right?
I see.
Because I want to build maybe 40 to 50 to 100 is my goal now to build in the next 10 years. So that'll be like 10 a year. That's a lot.
Wow, that's
It's
a
like
lot.
almost every month starting something.
Right,
God giving, it will happen. The other thing is the profitability is there. The data point, like you were saying, because the rents for an apartment might be $1,400,
Sure.
but because you are taking care of all the amenities,
Sure.
linen, laundry, caregiving, and restaurant style, food and everything, transportation, it's 4,400
I
or
see.
4,600, right, depending
Sure.
on the care level.
Sure.
So it's a doubly profitable
Mhm.
as compared to other, like that. Yeah,
Sure,
depends how we run it. Expenses are a lot more than the apartment because of
Sure.
all these things. But yeah, that's
So typically, just at a high level, if someone is listening to this and they know that multifamily, typically we value expenses somewhere between 45 to 50%, depending on the asset. But speaking of assisted living, what sort of is the percentage of
I would say
expenses?
65% expenses is pretty common. Yes,
Wow.
yes. But
I
still, then 35% or 30% even of the higher rents, right?
Sure,
It
sure.
will give you, yeah.
Right.
Exactly.
And then, Vinny, one last question here. In this assisted living space, for example, why not perhaps, purchase existing Core A plus assets in various states, and why go kind of the build new route? Like, what is your sort of model there?
That's a good point. I'm glad you said that. When we started the company, and my partner has started about 9, 10 years back, Bill Senior Living, very nice person. And what the main thing was, we want to spoil the generation that has spoiled us. That's our tagline and logo. What we find is that when somebody's in the 84, 85 years of age, or 90 or 103, we have those residents also, they just cannot go up and down the elevators, and they cannot really go and maneuver in smaller hallways, and they cannot really have already pre-built buildings,
Sure.
cannot provide the kind of luxury that we have in our mind.
I
So
see.
that's why we buy 5 to 7 acre of land.
Mhm.
We always buy 7 acres of land and build only 90 units on 7 acres,
I
so that
see.
we give them a great experience.
Awesome. Awesome. Thank you, Vinny. You've been a great guest. I know there are many more topics we can certainly delve into. Sure. I mean, such a short time, So just a last question, Vinny. What are some of your great advice that you have received? I know you came through, a lot of trials and tribulations, but some things that you always remember, or perhaps any advice that you may have received from your, let's say, your mentors or any colleagues and things like that. What kind of keeps you awake, and how I mean, you have such a vivacious smile and you're always positively thinking. Where does all this optimism, all of that comes from?
Thank you for saying that. I think the main thing I say to everybody is that the whys, if we can really figure out the whys, why we want to live every day as if it was the last day, of our life, and not really be, but passionate, and then dedicated to not you yourself, but dedicate to the investors who will get great returns, dedicated to the seniors who will be living in this. I just picture I dream about how many great families will really be liking to live at the Hampton Manor, Inns, our name brand,
Sure.
all across the USA. And then also the drive comes from being positive. I really say that because a lot of time we spend so much unproductive time in negativism, and
Sure.
everybody doubts us, and
Sure.
we doubt ourselves the most, I'm
Sure.
telling you. But the biggest thing is to hunker down and put plain plans into action and do that miracle morning to align yourself, to pay gratitude, to really think through the whole day and how to add value and be productive and use and delegate people. Virtual assistants are all over. I mean, the mind is such a thing. Expand the mind to think big. I never thought I'll be reaching $1 billion in real estate.
No,
Billion.
I mean, you absolutely very well said, Vinny. I appreciate it. I mean, there are so many young investors who follow you. You have your own students as well. As young as I am, I personally as well look forward to all the things that you are doing. And it's always your personality, your smile, and that positive outlook towards various things is such a learning lessons for all the young listeners like me and many others who are always following you. So I appreciate you taking time today, Vinny. Thank you for sharing your kind words and advice. Please share with the listeners how they can find you and learn more about you.
Oh, totally, totally. Thank you, Sarkar, for what you are doing. And it's such a pleasure to meet you. Really get to know finally. We talked before the podcast. And no, my brand is Vinney Chopra,
Sure.
Vinney Chopra. You can just Google me, YouTube me, Instagram me or LinkedIn, Facebook,
Sure.
and the key thing is, people can invest with us passively, they can learn from me, they can partner. We have lots of great opportunities, and connect with me any way they want if I can be of any help to them. Sure.
Thank you so much. And for viewers and listeners, we are at premiumcashflow.com as well. We have all the news articles, all the latest statistics as well. And of course, we have all the expert guests like Vinny, who are always there on our podcast as well. So thank you for stopping by and thank you for listening. If there is any interest in how to do passive investments, kindly reach out to us. We can certainly sort of jump on a short phone call and understand what your motivations are, and if there is any alignment, we can help you with all of that. So thank you, Vinny. It's been a pleasure. I'm sure we will be speaking soon on another podcast.
I would love to anytime. I'm yours, Sarkar. I think you got a good energy going. I appreciate you, what you are bringing value, and how tremendous success you have had. God bless you and your family and children, and stay healthy and be safe, and we'll hook up again.
I appreciate it. Thank you for coming.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.